Good evening. Hi. We're going to look at idea number 7. And number 7 is Thor explorations. Yeah, really like this idea. I like them all. Um, Thor explorations is a gold miner. It's actually based across a few different countries. So it's projects. If we have a look at this slide here on their website. So they've got main project is this one, Segi Lola. They've got then a project, earlier stage project in Ivory Coast, Cote d'Ivoire, and another in Senegal. In Segilola, they've got their live gold project, but they also have a lithium project as well. If we dive into the Segilola, it's quite an interesting. So this ore body is currently open pit, and as you can see, there's various deeper reserves that one of the decisions they're working towards is whether to go underground with this mine. That the open pit part of the ore body will be mined out in, by my estimations, I mean, about another year and a half. Now they have got stockpiles of ore, and so they've got a potential to expand to expand Segilola. But yeah, they are, from what I can tell, moving quite quickly through the resource. That's kind of how it looks in practice. And actually, there was quite a nice this photos piece. Now I'm relatively new into this share. It's not one I've been following. It was a reader that told me about it about 3 months ago, and so yeah, I guess when I looked at it and looked at the economics of it, I couldn't quite believe it was the price it was. It seemed exceptionally cheap. So 110 market cap. If we let's have a look, just have a look at what it's. Sorry, THX for explorations. So yeah, 106.6 million. So it's down slightly. I think when I wrote this, it was 17p a share, if I'm not mistaken. So yeah, the the work that's going on at the moment is, as I say, to extend Segilola. That's one option that they are considering. They've been mining it for 3 years. First gold pour was back here in 2021. And it's grown. So that was the revenue in 2022-23, and that was the so of course this 98 kilo ounce and then 73 kilo ounce, the 1,000 ounces. The 2021, I think, was because of the higher gold price compared to 2022, 2023, that these numbers and these amounts of revenue. You know, 2 years ago, this would have looked okay. It would have looked okay, but a couple of things have happened. I mean, number one, obviously, the gold price has moved in 2024, and you can look at it and think, well, it will move higher still in 2025, prospectively. Certainly, there does appear to be a lot of support to the gold price. This shows you the mineral resource from 2021, so 532,000 kilo ounces. The amount mined so far is about half of that. So there's another 250 based upon the indicated. You will notice there's resource underground. So there's this is the indicated inferred extensions, but as well as kind of going underground at Seguilola, there's also the idea that there's other locations near Seguilola that are within trucking distances that they're also looking at and also exploring. So when I looked at the numbers, and I looked at obviously here we can see, revenue fell. We can see cost of sales rose. So none of these things kind of make you kind of think, oh gosh, this looks like a growing opportunity when you look at it as at 31st of December 2023, so 12 months ago. We also see some other there's slight impairments. We see obviously profits have fallen by a great deal from 53 to 23, and that's kind of largely on the the basis of sort of lower levels of mining, and we also see that there's a lot of interest expense. So that 23, half that profit before income expense, interest expense is swallowed up with interest expense, so leaving only 10.8. We also see income tax 0. Now that did catch my eye. And there was some debate as to what the longevity of this income tax was. And it's, I would say, one of the features of THX is that there's not really anywhere that you can go on here or look at their various pieces of information, look at their presentation. I mean, if we go on here and we search for tax, so we can see here pioneer status incentive under the substantial fiscal incentives, but that's the only time tax is mentioned. So what is the tax? And it took a bit of digging to kind of get to the answer, which was, well, it's tax free for the next 2 years, so until the end of 2026. But more than just that, after 2026, a couple of things. Number one, that there's then a 95% capital allowance. So all of the mining and exploration presumably can be expensed. So if we just look at our tax here, so we can see that the that adds back quite a lot of so this 5-year tax incentive until late 26 is real big bonus. And the reason for that is that the Nigerian government, the federal government, are looking to promote other forms of industry, for an economy that's really dominated by oil and gas, and the oil and gas has had mixed fortunes. It's slightly in decline. A bit like Saudi Arabia, that they're looking to diversify from just being in a petro state, as the saying goes. So that's why they've got these tax incentives. It's to encourage mining into Nigeria. And the good thing for Thor is that obviously a lot of the things that you need for a gold mine, trucking, transportation, industrial skills, sort of raw materials, all of these things are all available. All of these things are all available locally. There's no shortage of skills of people that can build things, because they've been building things for the oil and gas industry for decades. But what they haven't been doing is actually building gold gold mines and gold mining. So that and it's also the case that all of the imported equipment is also tax-free, so there's no import tax on any of that. In fact, in my article, I talk about just the different forms of tax relief. So there's a 30% corporation tax that, as I say, is tax-free until 2026. There's a 1.5% rate after that, based upon a 95% capital allowance, accelerated capital allowance of 95% of expenditure. We also have a education allowance. We also have a tax on just things like free transfer of currency, remittance of capital, and exemption from import duties. The export of gold is exempt from VAT. The royalties, which would otherwise be 3%, is also exempted until the end of 2026. The education 2% of profit is exempted until the end of 2026. So yeah, there we go. The article was 17.5, so it's actually moved down since I wrote this article, so it's even cheaper today. Let's move on to the economics. Let's move on to the economics. So what we can see in as I say, the numbers kind of, you could look at the numbers as at 31st of the 12th, 2023, and think, actually, they're not that great. Although it was interesting because I sort of thought to myself, well, what if, obviously we had low gold prices during 2022-23. What if we hadn't? What would the revenue have looked like if it was just consistently 2,600 per ounce? And the answer was that, well, actually in 2022 it would have been an even higher level of revenue than what's on track for 2024. In other words, the underlying, because of this 1,686 revenue per ounce, and the drop in gold prices in 2022, it kind of makes it look a lot less attractive than it actually otherwise was. The other thing that drew my eye was the sub 1,000 all-in sustaining costs. So even with the low gold price, because we see that the 2022 profits are higher than the 2023 profits, well, a large part of that was the idea that this this margin here of 721 versus 523 again was a lot higher despite the lower price. But if the prices had been higher, that revenue would have been a lot higher, and that profit would have been a lot higher. I mean, $128 million. So see, if we divide that by 1.25, which is today's FX rate between US dollars and sterling. So you're looking at 100 million quid. And, as I say, this is a share that you're buying for 106 million quid. So the profit in 1 year practically pays for the share. I mean, just let that sink in for a second. So, that's like sort of you buying, let's say you buy another asset. Let's say you buy a house. Say you spend $250,000, or let's make it easy for myself. Let's say you spend 240,000 buying a house, and you're then able to charge, you're going to rent it out for 12 months, and that tenant is going to pay you 20,000 a month. So at the end of 2025, you've got a house and you've got £240,000 in your pocket. That's kind of why I just cannot believe that this is as cheap as it is. It's incredibly cheap. That's and of course, it's a limited life to the mine. there is that, the 500,000 ounces, and they're halfway through the 500,000 ounces. They have built up a store of ore. You can see that on their website, actually. I think if you look under the photos, you can see they've this is the built plant. This is the camp, and let's have a look. Segi Gold Project. Maybe it's under these. I saw the photos here before. What have I done with them? Hang on. Process plant. Nope. Those are 3 different photos. What did I do with those? That's the Senegal. That's the overview. I guess it must be under this. But the no. Where am I looking? Filings and reports, presentations. Oh, notes from the field. Sorry. I spotted this earlier today, and I thought I'd share it with you. I mean, I didn't include any of this in my article, but this notes from the field, and as I say, I've only known this share for a few months, but presumably this was something that they kind of did over the course of 2021. So if we go back in time to sort of, before they opened the mine, this is kind of how it all looked. They were sort of, building this, and then they did an interview with this person, and you can sort of see the whole thing coming together, kind of like what you would see on a Twitter feed nowadays. But I quite like the fact that they presumably did this back 3 or so years ago. Quite nice if you've got, obviously the Douta project in Senegal. If they're planning to do something similar, that is quite nice because it keeps investors informed. But anyway, the thing I was going to show you was the stockpiles. So I mean, this sort of is these are photographs of those stockpiles. So they've got that one that they've shared, and they've got that one that they've shared. So they've got sort of vast amounts of ore that they've deliberately not run. It's probably not as high grade as the stuff they're preferring to run through the plant, but it is ore run of mine that they can draw upon. Right. Moving into 2024. Sorry, I'm trying to build up for the and obviously here I'm sort of saying, if gold prices had been what they were back then. I mean, obviously this year they kind of are and have been. That the average price for 2024 is about 2,300. Oh, and sorry, yeah, one other thing I hadn't pointed out. Obviously, this profit dropped, and as I say, what went from 50 million to 20 million. And again, there was not really any explanation of why that was the case. So anyway, I was looking at it thinking, well, like you you're not selling this to me when your profits have just dropped 60%. Like, why is that? Anyway, we can see here this AISC jumps up very, very, by a lot, to 1400. And actually, the interesting thing here is that this all-in sustaining cost also includes capital expenditure. So, in other words, there's elements within this 13,1399 dollars per ounce that are not going to repeat. These were shoring up of a wall and different measures, various different things that weren't operational costs. Now, to my mind, I don't like the fact that they've done that. I don't like the fact that they've not kind of explained it very well. I mean, it's there in an interview with the CEO that he talks about, you know, that the costs went up because of it. But in the accounts, there's no real, you know, to my mind, you should capitalize things that are going to be recognized over the course of, you know, that, let's say, the next 18 months, you know, rather than just saying, oh yes, they happened in 2023, and you know, take the hit on the profit. You should spread it out over the lifetime of the income, match the costs to the income. But anyway, they haven't. They didn't. But what we can see is in 2024, and again, this is an estimated column now. So 1050 is my estimate, and that estimate is based on now the outlook. You can see here, Thor themselves say that the guidance is 800 to 900 ounces for 2024. I'm saying, do you know what? It'd be lovely if it is, but I'm assuming it's not going to be. I'm assuming it's going to be uh, a much higher cost. Now, I've not got any evidence to say that why that should be much higher, other than I'm just being a bit pessimistic. But as you can see, even when I am a bit pessimistic, I mean, we're talking $106 million, which would be about 80 million quid. So again, you know, you buy a house for $250,000, your rentals is, you know, what's 16,000 a month equivalent. So this return, you know, is sorry, this would be based upon it being 2,600. Sorry, based upon it being not 2,600. Sorry, I should have. It's this 87. So again, take off, you know, dollars into pounds. I mean, you're still looking at something like 65, 65 to sort of 70 million net profit on this. So it's incredibly good value, and the estimate, you know, even drawing it, and obviously I have sort of said 2,800 gold next year, which may or may not happen. I obviously haven't got a crystal ball, but it feels like it's heading that way. And again, I've kind of assumed 1,200 AISC here. I've got no basis for me to think that that will be you know, they're certainly not guided to that cost, but I'm just trying to be you know, reasonably just building in some safety to the numbers. But you can see here, I mean, the you know, the profitability at 1,600 and net profit of 149 million, near enough. I mean, that is, you know, your rental return on that imaginary house is above 250,000 for 1 year. I mean, that's just crazy, crazy. So that's kind of has as it looks. I mean, let's talk about risks and talk about sort of things beyond 2025. So I suppose it's can it extend the life of Lola? I mean, it's trying to. It's looking at satellites. It's looking at underground. When I talk about satellites, I'm talking about other sites that are nearby. And I talk about this in this part of the article where so the um, the red is the Lola mine and satellite gold. So we've basically got, you know, these red parts are the you know, these various different satellite sites where they are looking, they're drilling out, and they're looking to get extensions into Lola. The let's have a look. Yeah, so Lola is here, and then they've got sort of other, you can see here they've found 2.4 grams a ton here. They've found sort of between 3 and 8 here. Now, these obviously these are not vast prospects. I mean, 2 meters, 3 meters, and at those depths, I mean, those are pretty attractive depths, I would say. that's not deep underground. I mean, the overburden of what, 36 meters of soil to get that off, to get to 8 grams per ton of gold is pretty good economics. So, and then that to there, I think they talk about it being truckable. So it would be, literally just dump trucks that run to the mine here to process the ore. And as we see over here, we've got, some, I mean, look at that one, 2 meters at 227 grams a ton. I mean, that is just, and that's 80 meters down. Again, it's not, I mean, that's incredibly attractive economics, the Igila prospect. Um, 20 grams per ton, stream sediments, sampling of up to 10. So you'd like to think that with a very active program that is active and is ongoing, with the idea that you've got at least 18 months of Seguilola life, excluding going deeper, plus the ore, which the buildup of ore would probably stretch to the end of 2026. So you've actually got a pretty sharp, pretty exciting runway. Although saying that, nothing's certain. I mean, they have been prospecting here at the southern prospects, and I think whilst they found these samples, including 34, 26, 30. I mean, again, just incredibly strong discoveries, and you can see here the depth of these. I mean, practically 5 grams of gold 1 meter below the soil. I mean, you could literally get a shovel and remove a meter of soil in a day or so, and start panning for gold. I mean, it's that good. It is that good. 26 grams of gold if you go 2 meters down. So maybe 2 days of shoveling. I don't think I could do 2 days of shoveling, but I suppose if you've got those kinds of gold grades, then who knows? Maybe you find it within yourself, don't you? Anyway, so yeah, it looks promising. I mean, obviously nothing's nailed on, but this is only part of the story. If we move to Senegal and to the Douta project, so again, they are working towards a pre-feasibility study for Douta, for the so that in itself is imminent. I mean, obviously we're pretty much at the end of the year now, so I mean, probably expecting it in Q4 it ain't going to happen in Q4, but early 2025 is. But again, when you look at the surrounding mines, so these are some of the surrounding mines. Here we've got 1 million, here we've got 5, here we've got 4, here we've got 1, and these are all around this Douta license. I mean, who knows, but it kind of feels like there could be something there. And yeah, again, I sort of put some numbers to them. I mean, again, this is just, obviously I haven't got sight of the PFS, and I don't know that these, I'm kind of working from what these other mines have got and have found. But even taking something like, a 1400 cost, at 2600 gold and a 1200 margin, and even at that sort of grams per ton, very, very low, grams per ton, that it could be, it could grow into something quite strong. So and that's not the only one. So as well as the Ivory Coast, so that's sort of one option. That there's then other work and exploration going on as well. So as you can see here, the there's it's earlier stage, but between 2 and 10 grams, with pending news is pretty exciting. This, I mean, the 800 to 900 is pretty spectacular in my opinion. You know, AISC guidance. That's really, really good. Really, really, you know, cheap. That's some of the cheapest gold mining I think I've found. I mean, I know that in Zimbabwe, Caledonia mining were hitting sub 1,000, you know, per ounce for a while, and then theirs went up above 1,000. So it's you know, somewhere that's got sub 1,000. I mean, that's pretty special. And actually, it was interesting because all of that happened despite having 12 days of heavy rain, and it was like nearly half a meter, 50 centimeters of rain that fell, which is, I mean, if you know what that is, but that's a lot of rain. That's, you know, I mean, if you went on BBC News, I mean, it was literally just floods across the region. It was pretty horrific. So to actually get those sorts of costs when you've got floods, when you've got 12 days where you've basically just stopped production or impaired production, you know, that's, again, you know, it's not as though they've just had like a fair sailing year and managed to get the cost down. They got the cost down despite those disruptions. And you know, so again, very, very attractive economics when you consider it. There is as well a challenge with Osun State. So there's I call it a spat with the state government, and I question the, you know, that who's going to win out? Is it going to be the federal guys that want to encourage mining to the country of Nigeria, or is it the state officials that claim various things, none of which has been proven, and that kind of appears to be an attempt to extract money, perhaps. That you know, they've already won a cease and desist order in the courts against the state government. So you know, the fact that they've won an injunction is positive. They Thor claim that they, you know, that the whole thing is without merit, that it will be resolved. But it is a risk. I mean, you know, like if the state government, you know, if there's an announcement where the state government says, "Oh, I don't know, you know, we're no longer entitled to free taxes," I don't know, you know, anything could happen. But I just come back in my mind, my rationalization of this is, well, who is more important here, the federal government or the state government? And to my mind, it would, you know, just like it would be in Britain, the federal government or the central government is going to be more important than the state government. You know, they say what goes, in my mind. I don't know that to be true in Nigeria, but that's my reasonable assumption. Okay, what else to tell you about? So, so yeah, I mean, you know, I sort of do various, I do various uh, um, calculations and assumptions. You know, all of these are estimates. You can see here, this is based upon that 250,000 that's remaining. So, you know, 250,000 ounces. And this 175 is then when when Senegal kicks in, Douta kicks in, that I kind of see 2028, and this then, and you know, and I don't know that it's going to be 1,100, and I don't know that gold's going to be 3,000 in 2028. Obviously, I'm making what I think is a reasonable assumption of what could be the case. Obviously, you know, even if it's not that high, and even if it's not that low, there's plenty of margin there. Plenty of margin. As I say, it's, you know, if you buy a $250,000 house and you end up making 20,000 a year rent on that that 250,000 house. I mean, that's still 8%. You know, this has got to be lower, and this has got to be higher by a massive amount for it to become kind of like disappointing. You know, at 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 today's price, and at today's gold price, and at today's, at just kind of using the between 2 and 10 grams per ton, what we know so far of Duta, what we know of the surrounding mines, the multi-million ounce mines that surround Duta. Based upon all of that, I'm kind of saying 1100 could be the case. It doesn't feel like a totally unreasonable number. And by the way, that could still be part of Segilola. I mean, this could be Segilola underground is making up part of that. So again, if we're just getting the same economics or similar economics to what we've seen in 2024, well, we could see, that could actually be even lower than 1100. So again, just kind of talking through my thinking of the numbers, and I've kept the overheads just static at 11. This 11.2. Obviously, you could factor in some inflation. You could factor in some rising costs there. I suppose it's that. Oh, sorry. And by the way, this AISC per ounce, that isn't per ounce. Sorry, I've just realised that that kind of looks a bit misleading. That is AISC million dollars. So obviously that minus that is that. That should hopefully be obvious, but obviously that per ounce isn't. It's per ounce down here, but it's dollar millions. Should be dollar millions here. Cool. Okay. I also talk about lithium. So we haven't even gone anywhere near lithium yet, but we'll also talk about lithium. So lithium is these green blobs. So Segilola is here, and these are basically, and you can see 1% to 9%, 4%, 3%. So really good grades of lithium. I mean, obviously at the moment, lithium is a bit of a tricky one because prices have dropped down very, very far, and there's a surplus of lithium in the market, and a lot of that is that China is flooding the market with lithium. Obviously, if China draws up the drawbridges with lithium, that would cause lithium prices to increase. It's also the case that I've kind of wondered aloud in this article whether the 5-year tax zero corporation tax would apply to lithium. In other words, this New Star Minerals Limited is a separate business to SROL, which is the subsidiary gold miner. So you'd like to think that it's a new mineral, it's a new company, it's yes, it's part of a group, but Nigeria are looking to encourage new mining. There's a lithium miner that wants to start mining, and you've not got any lithium miners now, Nigeria. So what do you want to do? Again, it kind of feels like it wouldn't surprise me if it were going to be tax-free for another 5 years for lithium. And by the way, at the end of 2026, there is an option for the Nigerian government to extend the tax-free. Obviously, if we're in a situation where there's lots of prospective ground, but they're having a conversation about, what are you going to do around taxes? That we've over here we've got Senegal, and over here we've got Ivory Coast, and we've got our other projects. Do we invest into Nigeria, or do we invest into those countries? I don't know. I mean, I'm just sort of thinking aloud there, but it might not be the case that even after the 95% accelerated capital allowances have expired, that some sort of deal could perhaps be done, either just for lithium or even possibly for gold. Who knows? Okay, so I think that probably brings me to the end of this idea. I think I've covered pretty much all of the aspects to this. So to summarize, I mean, it's just incredibly cheap based upon the numbers. Um, I mean, yes, there are some risks, but to my mind, the risks kind of feel quite contained. Um, the um, the country itself. I mean, it's got a long track record of um, oil and gas companies working there and working there successfully. Oil majors as well as smaller oil companies. So um, whilst it on the world corruption index and things like that, Nigeria is not perfect. Does it justify um, the share price? I just think that yeah, the economics of this are just compelling. Just compelling. So that concludes this idea. I hope that's useful, and cheerio for now.